Hey everyone, welcome to another episode of James and
And James,
today's episode we talk about the home buying process and how can it be an exciting and a rewarding experience, but it also can be a source of anxiety and fear. And there's ways that we can counter that here, and we're going to share that with you today.
that's right.
So here are some common fears that people have when they are buying a home. And then here's also some things that how we counter those fears and anxieties. So one of the fears that people have is, well, one is the home buying process in general, right, James?
Right,
So
exactly.
what are some of the things that you come across when you get a client that's looking to buy a home?
Well, the first thing is I find that most clients are going to be starting online and they're doing their search and they see all the beautiful pictures, the location, the things that they want to, where they want to be and the things that they want to have in the house that they purchase. And they kind of get the cart before the horse. So they find the house and regardless of the price, they want to actually start looking at the home. But the most important piece is that pre-approval process to find out if that amount of home is going to be relevant to the type of monthly payment that they're comfortable spending. And so that's where using a local market, professional like yourself really comes into help because then we can go ahead and say, okay, they like this house. It's at this price point. How is their approval going to look when it comes down to their loan estimate and their monthly payment? Can you start to work on that for them to give them some better insight?
Yeah, because the stress and anxiety
Mm,
really is at that starting point of the pre-approval process
right.
because everybody's like, why do you need W-2s, pay stubs, bank statements, and all that good stuff? Well, we need to structure the financing to find out what you qualify for based off whatever that market interest rate is.
Right.
But, it's you're getting all that information, and then when we do get over to the process of looking at homes and you're in contract, we've pretty much filtered out all that stuff, right? We've gone through it and we've screened everything so we know what a comfortable payment looks like for the client. We know what their down payment looks like and funds to close, and it's all done up front, right? So then when
Right.
you do go into that meat and potatoes part of it, you already know what you're getting into, right? So
Hmm.
there's no that anxiety kind of just lifts away. It turns into during the 30 days, you're like, oh, you need another set of pay stubs. It becomes a natural thing, right?
Right.
We understand that people only do this once every 7 years, let's say, on average.
On
So
average.
but we do it every day, right?
Right.
We're working with different clients, different families, and stuff like that. So, like you said, yeah, the stress and anxiety, yeah, at first it can be overwhelming, but that's the reason why we do it, why we do it that way, why we do that pre-approval process.
Yeah.
What other stuff? So like, and then like you brought up like local, like somebody that's local, that's not like, let's say, online, to
Hmm.
where they're calling you and you're available on the weekends. It's going to be you that's showing the home versus, oh, we're gonna meet with John this week, or you're gonna meet with Tim or Becky the week after, right? It's
Yeah.
always different sometimes when you go with those online companies. I don't know how else to say it
Yeah.
versus with you, right? It's a
Right.
different experience. It's they. I believe that if somebody sticks with you and they're using you as a realtor, they're always going to get you, and you know the history, you know what their likes and dislikes are, and what they're looking for. Versus if you go Tom, Dick, and Harry every different time, it's like, well, didn't Tom tell you? No,
Yeah.
it goes into
Exactly.
that, right?
Yeah.
So, what
Yeah.
else do you see as far as that process in that stress or anxiety?
Well, one of the first things is actually taking a step back. It's looking at the source of the problem, if you will, when it comes to fear and anxiety.
Mhm.
And we in my business, and I think you've run across the similarities of it as well. It's what we call the fear of the unknown. And when we don't
Hmm.
understand something, that's when the fear and anxiety kicks in because you're like, oh my gosh, I need 20% down. Oh my gosh, I need an 815 credit score. Oh my gosh, I need to have already done this before. I need to have already bought and sold a house in order to be competitive in this market or be even relevant in this market. And that's not the case. Housing or shelter, it's a basic human, desire and need. And so when you're dealing with someone that doesn't know enough or doesn't have the right, insights when it comes to something, that's when the fear and anxiety kicks in. And so me as a local real estate professional, I've done this before. Like you said, we do this every day. You facilitate and see the process of getting someone in that underwriting process every day. So we have done it all the time. And I've always lived by this adage, and one of my old mentors actually told me this, that facts just tell, but stories sell. And
Hmm.
so when clients come to me, they've already done some work on a random website about what the mortgage would be, or they go off of what the estimated monthly payment may be on that particular website, but they're not keeping in consideration what the current market interest rate is, their credit score, and that understanding that it's deeper than using say a Credit Karma website for an accurate credit reporting or FICO score. It's about really knowing what's happening by talking to that local trusted professional. And
Yeah, and
then
that's where the fear that you just brought up, the fear of the unknown,
yeah,
then let's find out, right?
yeah,
Let's be known,
exactly.
right? So people
Hmm.
was like, well, I don't want to right now because somebody said what you just brought up. Somebody said this, and they think that applies to them. And
Exactly.
I'm like, well, let's find out, right?
Right.
Let's
Yeah.
get rid of the unknown and find out, right?
Yeah. Because all the things that you see online, it's always that glorified, everybody's smiling, they're holding a for sale sign or they're getting the keys in front of the house, and that's all they see. Closed for, bought our house. But they don't see what goes into that process in that, 30, 45-day cycle where all this work is being done in the background. And, again, I always tell my clients, and I always go through this approach of helping them understand completely what it is we do. And I even start with sort of a conversation around, maybe they have maybe like a little physical ailment, and they may go to WebMD to get an understanding of what the symptoms is and understand from based upon those symptoms what could be the root cause of it. You may have this, or this, or this, but when you really need to get to the root of it and the whole nuts and bolts of getting that issue resolved, you got to go see a doctor. And so, when it comes to the home buying process, we're the doctors, you know, and that's what working with that local professional will do. So we do all the things about understanding, hey, I want a 4 bedroom house. Well, do you need a 4 bedroom house? What's important about 4 bedrooms? And I ask those questions and say, hey, what if we had a 3 bedroom with a bonus room? Would that serve the need, or do you actually have to have 4 bedrooms? And then they start to think about it like, wow, maybe I could deal with just a bonus room, save some money because the 4 bedroom price point is going to be higher than the 3 bedroom. How big of a yard do you need? Do you really need this? Do you really need that? And once we go through those deep dives and deep conversations, they start to say, wow, thanks for letting me know. I don't need that, because yeah, I mean, we're commission based in our business. So yeah, I'll sell you $10 million house if you want it. But the most important thing is you may be able to be well satisfied with a $700,000 house. It doesn't matter to me. I want to make sure that you're happy. That's the number one goal.
Right, right. And that's where it comes into even we go into that other unknown of, well, I'm buying a home, I'm going to look at, or you got pre-approved. Now
Hmm.
we're going with James to go look at a home. They want to, that's the home. And then they
Hmm.
go, okay, what's next? And they go, well, you put in an offer and then that gets accepted. And I mean, we have another video about all this too, right?
Right.
but,
Hmm.
but you go into the unknown of, well, what if something happens to the house once I buy it? Like there's you didn't see that there was an issue before,
Yeah.
right?
Yeah.
And
Yeah.
that's where we talk about like home inspections, and
Hmm.
I'm very high advocate. I'm a strong advocate of getting home inspections, right?
Yeah.
And
Yeah.
because there are times, and we look at on the real estate on your side of it is the seller goes, oh, I already got a home inspection done.
Mm-hmm.
Now, do we go with that one, or do we go with we get our own, right? And I guess that's just you weigh those questions out, and that's where we talk with you as the professional. Go, what do you recommend, right?
Yeah, yeah. And again, it goes right back into the home shopping to getting negotiations done to get to the point where we can even have the home inspected. You know, we're going to take into consideration all of our negotiating skills and blend that into the process based upon what the market conditions look like, because sometimes the market moves faster than others. Right now we're a little bit more in a balanced market where home inspections are a lot more prevalent than they have been in the past. But the most important thing to remove a lot of the stress is, am I paying for more than I should be paying? So the house is listed at X, but I want to offer Y or Z. And it's like, it doesn't necessarily work that way, but it can. And that's where hiring a professional to represent you gets you in that best position. And then when we start talking about the home inspection process, we understand that number one, it's a subjective report. So we can actually have room to mitigate certain things that the inspection report may show up. But I highly recommend getting a home inspection because the seller disclosure statement is only going to show what the seller knows about the house from a very latent kind of perspective. So things that they can see. You see some of those, we call those cracks in the foundation. Those are kind of called like step cracks. That's something, if you could see it, then there could be a problem with the foundation. But if there's something else involved, that's like attic spaces, crawl spaces that may have mold or may not have enough insulation, some of those things the seller can't know about. So we have to make sure that we're in a position where get the home inspection, help them understand how to read it, how to understand it, and then we can go from there. And
Mm-hmm.
again, like you said, you're a big advocate of it. So am I.
Yeah. So what other things do you like see as far as the fears? Because like I could go into like the financing part. Like everybody's
Uh-huh.
they're worried, oh, I'm gonna be stuck with a mortgage payment for 30 years.
Right, right.
um, I'm not gonna be able to come up with the down payment or the funds to close, and and that's where we go into that we go back to the pre-approval
Yeah.
process. Is well, we get all that, we open the book and we read it and we find out what the story tells, right? And
Mm-hmm.
that's your finances, your credit, your down payment and all that good stuff. But there's options, right? There's down
Yeah.
payment assistance programs. There's
Mm-hmm.
gift money guidelines to allow
Right.
your family members to gift you money. Talk to the professionals. That's what we're talking, that's why we're trying to educate people and let them know how to get around stuff or how to go about doing stuff, right?
Yeah, a lot of times they're concerned about how much earnest money or what is earnest money, and I try to let them know, the earnest money is a deposit that is what is intended in the name. It's your earnest desire to exhibit to the seller that I'm going to be completing this process, and
Mhm.
those funds are typically an arbitrary amount. I advise my clients to submit at least what they're comfortable with, but at minimum 1 to 3% of the purchase price. And
Mhm.
that's going to be held in a trust account with the escrow office. And those funds go toward their closing costs. So there's no risk to it as long as we abide by the contingencies and addendums within the contract. So the inspection contingency is one of those items that if the home is in just complete disrepair or there's some unforeseen issue with mold or some other detractor from making the house suitable to live in, then you can terminate the contract and you're going to receive 100% of your earnest money back, no questions asked. So we remove that fear, and that brings us through that stage. And then we've gotten through the home inspection process, and now we start talking about again getting that final loan disclosure and understanding how to read that, and because we provide the information to our clients, and even though we're operating as a fiduciary to kind of walk them through the process, letting them know our duties and roles and responsibilities, it's still the client's role to read the contract and understand it. And if need be, advise them to consult with an attorney to understand the language within the contract. Because if you didn't pay attention to that initial loan disclosure that came out, and then you're looking at your monthly payment after everything's all said and done, and the dust settles, that's not a reason to get out of the contract, and you could potentially lose your earnest money from that particular bit of unawareness. So, how do you walk the client through making sure they understand the loan disclosure and how it impacts them from a down payment perspective and a final monthly payment perspective?
Well, when we do the initial consultation,
Hmm.
um, there's that we send out, right? I'll send out like 3 scenarios if we're looking at FHA conventional versus whatever products are available, right?
Hmm.
And we go line by line. Well, I do. I go line
Hmm.
by line and I say, this is the appraisal fee, this is a credit report, like all the fees, the down payment,
Yeah.
and then what the bottom line is, what the payment is. And I ask what, like, do you have any questions? Do you understand? I'm trying to make sure that the client knows what that all those numbers mean, right? Because like
Yeah.
you brought up, when those initials disclosures get sent out, it's on a loan
Hmm.
estimate. It's like a 3-page form that goes out with the disclosures, but it's not really broke down. It's supposed to be easy for consumers because the Consumer Financial Protection Bureau,
Hmm.
CFPB, right? They initiated this form to be sent out, and it's supposed to make it be easier for the consumer to read, but it's A plus B plus JKL, right? And you're like, whoa, right? But
Yeah.
that scenario form is the worksheet is it's itemized, right?
Yeah.
So
Yeah.
we just make sure that we're very transparent about what the fees are, what the payment, all that good stuff, right? And then when they get that LE, it's like, oh, that's why there's that there, that right? So they
Yeah.
understand it, right?
Yeah.
And we're constantly asking, do you have any questions? Because
Yeah.
there's no stupid questions in this world because again, they don't do it every day. We do, right?
Yeah.
So I'm
Yeah.
like, ask me questions. Do make sure, right? Some people are like, man, it's, because I've had clients just sign everything. And then, like you said, at the end go, whoa, whoa, whoa. And I'm like, no, whoa, 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 because this is what we talked about
Right.
from day one, right? Because so from day one to day 30, I'm making sure that they understand because then the CD, like you brought up, the CD goes out at the end.
Hmm.
That's a closing disclosure. And you get 3 days to review that form.
Yeah.
And it just mirrors kind of like the loan estimate, the day one, right?
Mhm.
So that some things do change. Fees change, like title escrow fees or your insurance company you picked is different from what
Mhm.
we initially quoted. Um, but it's very minimal differences, right? So it's
Right.
pretty because we have tolerances that we have to go by, right? And if it goes over a tolerance, then we're eating the fee, right? So
Right.
we're always trying to stay as close as possible. So but yeah, if we're transparent from day one, then by day 30, it's pretty much just signing everything, you know.
Yeah.
But like
Yeah.
you said, there's disclosures in there that you need to read, you need to understand, and in the today's technology now, it's pretty easy for people to just they get these disclosures and you electronic signature everything now, right? With
Mhm.
before, I would have to print off the disclosures and then I'd go through and highlight them everything. And then I'd go to the client's house or place of business or a coffee shop or my office and then sit with them and go page by page. And I'm like, okay,
Mhm.
this is the affiliated business disclosure and explain what that disclosure is. And then, then
Yeah.
here's where you sign, right? It would be like an hour of flipping pages, right? But
Right.
now it's everybody's just click, 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 and they don't even read, right? So
Mhm.
I like you said, I recommend and advise people, regardless,
Mhm.
to at least scan over those disclosures, right? And understand, like if you get a contract and there's, oh, we need you to sign this addendum, don't just sign it.
Mhm.
Read what the addendum is, right? Like, what
Yeah.
is it? What's it for? Why are we doing that? Ask you those questions, right? Why are
Right.
we signing this? Why? Oh, you remember when we were talking about extending the contract a couple days? That's
Mhm.
typically what the addendums are, right?
Yeah. Yeah. That's
So,
what I needed. Yeah.
Yeah, but that's what we're not just here to push the paper out and have you sign it. We're send you the papers and then go, do you understand what, if you have any questions, let us know. So we make sure you understand what's going on.
Yeah.
But
And it's
yeah,
sometimes
it's
when the client is paying or bidding a little bit more than the purchase price, they're concerned about, the appraisal of value. Uh,
mhm,
and so, I get a question sometimes about, did the appraisal come back? Where are we at of the appraisal? What happens if the appraisal's low? Things like that. When because the buyer's paying for the appraisal, when
right.
are they involved in that process once the appraiser submits their report, or how do you work that out with the client?
Well, when we get the appraisal, it gets paid through a link from the client.
Okay.
That's a third party type vendor.
Hmm.
But we get notifications like the appraiser has accepted the order. Then we get a notification when the appraiser anticipates to go out to the property.
Hmm.
So we stay in that communication with you as the realtor and then the client, like,
Yeah.
hey, on this day is when we expect the appraisal to be done. And then on this day is when we expect the appraisal report. And then when we review it, of course, there's going to be another couple days after we receive it because the underwriter has to clear that appraisal, right?
Okay. Got it.
Make sure there's no repairs needed to be done, right? Stuff like that. But as soon as we get it, I don't send it, but I just say, "Hey, it came in at this value and it looks
Okay.
like it's clear," right? So
Mm-hmm.
now once we get it cleared, then by policy, we have to send that report to the client because
Yeah.
it's theirs, right? It's they
Yeah.
paid for it, right? So they get it a couple times from me. They get it when we're supposed to send it, and then
Yeah.
they get it again on a thumb drive because I'll put it to a thumb drive with like their title report, their insurance binder, and then the appraisal report, so that if they need that information like in the future, they can just put it in their laptop and the
Hmm.
information's there. So they own the appraisal report and they get a
Got it.
copy of it.
Got it.
Kind of same thing, inspections are done outside of the financing part of it, but since they've paid for it, right, outside, then the home inspector typically gives them the report, right?
Hmm.
So,
Yep. And again, I think one of the last things I, find in the transaction process to closing is we've got the appraisal done, we've done the inspections, we're all the way under contract, we got a closing date, and then buyers are thinking about setting up the moving trucks, and they want to buy new furniture or buy new appliances and whatnot, and so I let them know, like, hey, don't do anything right away. You wait till we're closed, and when I mean closed, that means that the loan has been funded and it's been sent out for recording with the county, and then we get the recording numbers back. Then you're set and clear to do all that you want to do with the process. But sometimes they don't know, and if we don't tell them, they'll jump the gun and they'll go buy some furniture, or they'll go buy some appliances, and that could cause a problem. Is that right?
yeah, it's anytime you open an account or close an account, it'll hit your credit score.
Mm-hmm.
And if somebody goes to open up like let's just say they go to Lowe's or something like that, and because they're gonna, oh, I'm gonna put drywall in or whatever. They
Yeah.
already got,
Sears. Remember?
yeah, we brought up Sears, or they go to, you know, some furniture place, and they're, oh, we are gonna buy this sectional or this couch or whatever. And I'm like, whoa, 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 wait, it's um, but typically when that CD, that closing disclosure goes out towards the end, that
Hmm.
is the finish line,
There you go.
right? That's
Yeah.
that's where, and you got 3 days, then you got your signing appointment, then what, all that good stuff. Like, excuse me, like you talked about, like recording and stuff like that. But when that CD goes out, it's pretty much the final approval. So
Yeah.
then you got at least 4 or 5 days to make those arrangements and then do that stuff, right?
Yeah.
But yeah, typically we'd say wait until after closing to open or close any accounts or pay off stuff or whatever.
Yeah. Yeah.
Um, but
Hmm.
it's because people are like, when you brought up a good point. When can I call the moving trucks? That's another aspect of it is they got to let people know that to help them to go move, right? Or friends or family to like, I'm trying to get my friends and family to come over and help us move. We're all packed, right? And it's like, I know I can't say until that CD goes out, right? I
Yeah.
can't because anything can pop up, right? Like,
Well, yeah, absolutely. And see, one of the things I've had happen, and it was a matter of letting the client know that, yes, we're closed, but the contract actually says that the seller of that property has until 9 p.m. to
mhm,
vacate the property. So this is another benefit for working with a local market experienced expert to help you through the process. When I'm writing the contracts, I always stipulate that the possession date is on that day, but it's also at 5 p.m. So
mhm,
it's amending the contract, from that boilerplate language that says 9 p.m. I'm making it 5 p.m. because a lot of times when the recording is done and it's done during business hours, we get the recording numbers, say 2, 3 o'clock in the afternoon.
right,
We meet with the client to get the keys and whatnot. But hey, the seller's still in the house packing up the final bit of their stuff, or the seller has a cleaning company coming in to, detail the home and make it most presentable for you. And without that conversation, then there's going to be a potential for an issue. So we always want to make sure to have all that stuff taken care of, as well as doing that final walkthrough. So we know that there's not going to be any issues up to and around the closing date.
right. I've
Mm-hmm.
had we've gotten towards the end,
Mm-hmm.
and then they do that final walkthrough,
Yep.
and um, we closed this transaction. It was, but
Uh-huh.
what happened was is the real estate agent calls me and goes, James, what would the underwriter say if we need to extend the contract? And
Yeah.
I'm like, I don't. Do you need to extend? It's always like, which hand do I cut off?
Mm-hmm.
Sometimes like, we want to close, we need to close now, and I'm like, go 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 go. And then in this
Yeah.
case, it was they wanted an extension, right? And I'm like, well, now what? So, anyways, the realtor calls me and he's like, well, the pipe broke in the basement, like the
Right.
downstairs, and they were literally, I guess, in knee high of water. Like the water
Mhm.
was knee high, and they
Yeah.
wanted to extend it for a couple weeks so that they could get the water out, fix and repair whatever, right?
Yeah.
So it goes back to it's not done until it's done, right?
Right.
Thank goodness that happened before they closed, because it would have
Mhm.
sucked if they moved in and then that
Oh,
pipe broke, right?
that's
And
terrible. Yeah.
so it got taken care of. So it all worked out, and the seller was not happy, but stuff happens, right?
Hmm.
So just like the dog crawling.
Yeah. Yeah. Meet my co-host. Here's my co-host, Carl the Bulldog. He likes to help me out as well. He goes and
Yeah,
shows houses with me too sometimes. So yeah, that's my
nice.
trusty sidekick.
When it comes down to buying, selling, and the financing, you know, we're advocates as well for, like we are talking about, local people that are
Hmm.
local versus being online, because you're available. You know
Yeah.
what areas people are looking in, right? You've been there at least, right?
Yeah.
Same thing with me on my end is, I'm here, I'm in Washington State, right?
Mhm.
And so it's, so we were like, well, you could work in another country. And I'm like, yeah, I could, but I know the area. I'm available 7 days a week versus a Monday through Friday online somebody, right?
Mhm.
And then when you call me, you're getting me. You're not you're not being passed around, right?
Mhm.
And I think the same thing it goes for when in real estate or for agents is the same thing. They're calling you, they're getting a hold of you. You know the background, you know the history, you know what their wants and needs are, what their likes and all that good stuff, right? So I'm like, that's where that'll ease that fear. That'll ease that
Absolutely.
anxiety. Is
Absolutely.
I know when I call James, I'm getting James. I know when I'm calling this James, they're getting
Mhm.
you, right? So
Yeah.
I don't. I say my name, and I don't know if I'm talking about you or me. The other things is, of course, and that's what we talk about is like long-term commitments, like, oh, I'm buying a house, I'm gonna be stuck for 30 years. The financial investment, um, you know, it is it worth it? And we go back to other videos and we're advocates about people buying a home and why it's worth it. And it's the investment and it's a long-term investment. It could be a short term. It depends on what kind of market we're in.
Mhm.
But if you have that mentality of it's a long-term investment, then you're going to make out. You know, I
Absolutely.
believe so.
Yeah.
Um, you know, and then the other thing is what happens if the market crashes? We always hear that, right? So if I'm going to buy a house now, is the market going to crash and am I going to be upside down? Well, if we've set you up right financially to make that mortgage payment and you know what that payment is every month, that goes away because you know you're going to
Yeah.
be able to survive a
Right.
crash, right?
And it's also about educating them because that's the fear of the unknown. I mean, I asked them and said, well, what caused the market to crash? And
Hmm.
then we start to go through that whole process of understanding that,
Right,
there was a lot of predatory and subprime lending. There
right,
was stated income loans, basically where the borrower would just tell the lender, this is how much I make, and so on and so forth. And there wasn't a lot of education, and when I say education to the borrower, but more compliance for the lenders. And so those subprime, non-conforming loans were being just passed out. And, again, when you think about why a mortgage needs to be vetted out properly, is because we don't want to get stuck into that, trash for cash kind of
right,
situation where mortgages are being sold, the mortgage-backed securities are being sold on the open market, and then they're not worth what they say they are. So we're not in a situation now with the lending structure and the compliance that we have to go through. Thus, the reason why we need to see 2 months of your bank statements or 2 years of W-2 tax filings. So that way,
right.
everything is a rock solid situation. We have a very robust lending environment so that it safeguards us from those volatile market conditions that could lead to a catastrophic event like 2008 and 9. So
Mhm.
that's what I use to help them to ease the concerns about, well, what if the market's going to crash? Again, this is the reason why we can say with a high sense of confidence, we're not in the same situation that we were in before.
Yeah, it's a different world that we're in. I mean, there's still things out there that affect our market and what
Hmm.
happens.
Right.
I mean, if the European market comes out that something happened there, there's a ripple effect, right? But
Mhm.
it's not like what you brought up. It's not like just like you said. It's not liar loans, stated
Hmm.
income, stated assets. It's not subprime. I mean, there are hard money. There's still that market's still there. It's
Hmm.
just like compliance kicked in, guidelines kicked in.
Guidelines,
The
yes.
government was like, "Oh crap, I say, well, back in the day we're selling crack with money, right? And then the crack got the faucet got turned off, so we had a bunch of crackheads running around because I can buy another. There's many
Hmm.
people buying homes that shouldn't have been buying a home, right?
Yeah, yeah.
Um, but like you brought, state income, state like the term of, use a stethoscope, check the heartbeat, see if hold the mirror underneath their nose, there's breath. They got a 700 credit score, they're approved, they're buying 5 homes, right?
Yeah,
Because
yeah.
you could just constantly say, oh, I make this much, I make this much. That's gone, right?
Hmm.
Because like you said, you have to vet, you have to show you make that much. You have to show you have money. You have to show it's called the ability to repay, and that's
Hmm.
called and
Hmm.
it's an ATR form, and that's a guideline. You have to make sure you can pay the loan, you can pay the mortgage payment, right?
Hmm.
That's in place. I don't think that'll ever go away now.
No,
I don't think that's one of the guidelines that'll just stay forever,
and
right?
it shouldn't. Right.
You
It should
know,
stay in place.
right. So, and then there's ratio factors. That's why we look at your pay stubs and your W-2s. One, your pay stubs to see that you do get paid what you get paid, and then your debt to income ratios are within the threshold, right?
Hmm.
We don't want to overextend you. We're not like credit card company where we're just constantly hitting you up to finance stuff. This is one big purchase, it's a huge purchase, right? It's a home
Mm-hmm.
versus like your credit card where you go buy a mattress or something, right? Or pay for gas, right? But we want to make sure you're within those thresholds and those guidelines so we don't have another 2008. That's why we're at where we are today. That's why we're where we're at. Like you said, mortgage-backed securities are being sold because those investors they're banking that you're going to be able to make that mortgage payment and they're going to be able to make money off of that, right?
Right.
If
Yeah.
if you can't do that, then it's going to be, we're back to square one, and I don't think
Yeah.
that's going to happen.
Right.
People keep bringing off, yeah, people always bring up, oh, the crash. I'm like, when?
And how?
Yeah, like the pandemic was kind of a dip for us,
Hmm.
right?
Hmm.
But people were buying homes still in
It
the
was a dip,
pandemic,
not a halt. Exactly.
Yeah, it's the market keeps going no matter what. So that's what I mean. Maybe you brought up is bidding wars.
Hmm.
I mean, that's going on. It comes and it goes, right? So
Yeah,
it's
it does. Right.
comes back and
Hmm.
goes, and that's those cycles, right? The real estate
Exactly.
cycles. So bidding war is a bidding war, but like I think you brought up was, how do you go around that on those bidding wars as
Well,
far as like
again,
if
it really is a matter of the advising of the client about what kind of market we're in. If we are in a very, very strong seller's market, inflation is low, money is cheap to borrow, then there's going to be that aspect of an inflated price. And that's where again, we advise the client as to what kind of market we're in so they don't overpay. But when there is a competitive situation, we educate them that you don't just have to shoot your entire pre-approval amount, and then working with a local lender that's readily accessible, like you yourself at Leader One. I can actually get you into a property, to see it, and we can advise and analyze what the value of that property is. So, say, we're looking at a property, say it's $700,000, but you're approved up to eight. We don't have to submit a pre-approval for 800,000 to the seller, so they can only see that you're offering, say, 725, and then we style this pre-approval to 725, not 800,000. So the seller's thinking like, well, we can counter back at a higher amount. And then we also look at, exercising some of the things that are not unknown, but people have forgotten about them to a certain degree. And those are those escalation clauses. Those are those addendums and ways that we can insulate you from overpaying by your price increasing incrementally versus you just, again, shoving all your chips into the middle of the casino, and you would just, you may win, but then you got the fear that you've overpaid. And that fear of regret is something that can sit with the client for a long time and leave a very, very bitter aftertaste. And again, we want to be in a position where we're the trusted resource for life. We're not just here to help them buy this one house, but when they look to upgrade or downsize, we want to be the person that they trust to refinance or to relist the house with us and then move them into the next property. So, but when you do the job the right way and you provide the right information, you advise the clients that, hey, I don't have a crystal ball, but I do have a wealth of knowledge that can help to take away as much as that unknown. And when you take away the unknown, you subsequently take away the fear.
yeah, and that's where it goes into, like you brought up the pre-approval letter with the amount on there.
Mm-hmm.
I was like, don't show, like it's like poker, right? Don't show your
Mm-hmm.
full hand, right? Because
Yeah.
you're negotiating. So yeah, if you're pre-approved for 800,000, don't just send that letter. I'm like,
Mm-hmm.
call me and I can easily. We know your max is 800,000, but
Mm-hmm.
if it's 700, let's work from there, right?
Yeah.
And then I go, let's talk with James and find out, what those increments are for the escalation, and we should be fine, right? As long as we're
That's right.
underneath the 800. Some people are like, I've had people send the letter and I'm like, whoa, and then of course the seller's accepting it or they're countering, right? And they're
Yeah.
like, well, you can do 800, and it's like, see, I told you, like.
Yeah.
So like, now are you gonna deny the counter that they're sending you? I was like, because you
They
showed
know
them
you can
you
afford it.
showed them you had a full house. You know,
Yeah.
it's like.
Mhm. Yeah. Exactly.
So, I mean, these are just a few examples of fears that people have, right?
Right.
I'm buying a home, but like we talked about, it's essential for you to contact a
That's right.
professional, us.
Local person, local
Um,
expert.
right. You can do your research. That's
Hmm.
fine. You know, you can go online, do your, but confirm that research with us,
Yeah.
right?
Yes.
Because then that kind of, once you talk with us, we're here to alleviate. Is that the word? Alleviate? Is that
Alleviate.
how alleviate?
Mhm.
I had a problem saying exactly the other day. But we're here to help reduce the stress, right?
That's
We're
right.
here to help reduce the stress and make it as smooth as possible. So, if they have any questions, leave a comment below, hit like, hit subscribe.
Yes.
We'll have our contact information below so they can reach out directly, right?
Yeah.
So,
And
thanks again for.
I'm gonna leave them with
Oh,
this, because I'm a '70s baby and I grew up in that GI Joe era, and it's always been said, knowing is half the battle.
go, Joe. Thanks for watching, James and.
And James, it's been a pleasure.